everyone. Welcome to this Roundup. Thanks to advances in science and technology, fundamental changes are on its way to nations, its government, industries, organizations, and academia, in short referred to as NGIOA. Now, a potential promise of this fundamental change is transformation. Transformation that is creating completely new technology, business, management, and governance models. As we see across nations, we are witnessing great examples of how technology driven transformation is redefining the core business models of NGIOA. Uber and Facebook are some of the great examples. Financial industry is also going through similar technology driven transformation. Almost every type of financial activity, from banking to payments to wealth management, is being reimagined and redesigned currently. As technology begins to shake up the financial industry workflow and processes, tasks that were once handled using paper money or huge giant computers and human interaction are now being completed entirely on digital interfaces and even without involvement of any human. When new competitors, new technology, and new consumer expectations begin to impact the financial industry, the question surrounding the industry today is not whether it will be transformed, but how it will be transformed. So, where is all this going? To discuss this further, I'm delighted to welcome Patrick Bucquet. Patrick is the co-founder and senior partner at Chappuis, Halder and Company. Welcome, Patrick. We are delighted to have you on Risk Roundup.
Yeah, hi, and thank you for inviting me. It's a great pleasure for me to be here.
Wonderful, Patrick. So, what opportunities the financial industry sees because of the advances in technology? Technologies like information communication, digitization, artificial intelligence, cloud computing, blockchain, and Internet of Things.
Yeah, I mean, you mentioned lots of technologies that are actually impacting the financial industry because, as you know, I mean, this industry has been quite old now. It's a very mature industry. Business processes are very well known. Usually they rely on very old technologies, IT legacy, and there is, for that reason, I mean, there are lots of opportunities for improvement. And the technology now is so mature that it brings some new capabilities for the banks and for insurance companies. And they can use these new technologies first to optimize their own business, to improve their efficiency, but also to address new markets. And what we are seeing, you know, in emerging countries where mobile is used to basically bank people, to give people access to financial services, is a great opportunity for a financial institution to basically open new markets, increase their market potential.
Yes, yes, no, that is true. Now, what do you think are the main growth drivers of this entire new ecosystem that is being redesigned and built at this moment for the financial industry?
Yeah, I think the first one is definitely financial inclusion. And when I speak about financial inclusion, it's of course what we all have in mind in terms of what is happening in emerging countries, where lots of people can now have access to financial services, but also what could happen in more developed countries, where some people were excluded anyway from the financial industry for many, many reasons. And so, for instance, just to give you this example of peer-to-peer lending, we can consider that peer-to-peer lending is providing a new way for some people to have access to loans. These guys were not able to have access to loans because of their credit score or whatever. But technology is now bringing a new opportunity for them to have access to financial services. So the first driver is definitely financial inclusion. The second one is I would say providing more services instead of just product. So we know that the global economic context is very difficult for banks and insurance companies with, in some places, low interest rates. So they have to find a new way to make money. And so providing new services is another key driver. And the last one, of course, which is kind of related, is about operational efficiency, automation, intelligence artificial. basically to replace, any kind of very manual processes, manual procedures, which can be done now with computers or with machines.
Yes, yes. No, those are really great opportunities and so many advantages that this technology provides and it brings to each and every sector of the financial industry. So, from your perspective, which financial sectors you think are more vulnerable to disruption because of all these technological advances?
Well, I think definitely it started and it's still ongoing in the retail banking industry, and it probably started with payment. When you look at payment now, the payment landscape, well, just speaking about the United States, now banks are only counting for 10% of international transfer. So this has been probably the first area where banks have been disrupted. And now, it's moving from retail banking to more private banking and insurance business. Robo-advisor is definitely a place where private banks, of course, they can leverage that, but they see newcomers trying to disrupt their business model, targeting, the low part of the market. And that corporate and investment banking is probably the last area where technology is going to be used and to come and to change the model. And for that last part, probably blockchain is going to be a good way to see new entrants, newcomers, trying to compete with corporate and investment banks.
I see, I see. From your observations, which technologies you see that is very promising for the financial industry and where the more investment is going, depending on your exposure to this industry?
Yeah, I think we have to probably to separate, the retail industry. So let's say retail banking, probably insurance, and the corporate and investment banking, or let's say the wholesale banking. When it comes to retail banking, I think the mobile technology and everything you can think about, everything you can do on your mobile, how you can use your mobile, is definitely probably the most used technology. We had lots of newcomers in that area, having mobile first approach, designing offer for mobile, using the mobile for payment, to provide, real-time advice. So definitely mobile has been the most promising technology, and I guess is still the most promising technology. And then when it comes to corporate and investment banking, I would say that artificial intelligence, machine learning, and to some extent, blockchain is definitely something really interesting to look at, because the whole point of this industry is to get more and more automated, to get more automation, and to get less and less manual with people, doing some basic tasks. So I guess machine learning is definitely the other technology I would select when it comes to wholesale banking.
Yes, very true. And you made some really good distinction that for retail, right now the mobile phones, and because everyone is going towards smartphones, so that is a really important technology, and the financial sector is taking advantage of that. And you are right about that artificial intelligence and machine learning, when you look at the corporate banking and industrial banking, that's where you see a lot of innovations happening, and a lot of we are hearing many stories that asset banking, you see the artificial intelligence or based products that have come out, the innovations, they are pretty much taking over the research analyst job. So research, it's so easy for these artificial intelligence based machines, sort of like intelligent machines, to take over those roles. And blockchain, we are seeing a lot of advances in currency. We are not going to address too much about the digital currency in this session today, because we just had a separate session on digital currency. but there is a whole new focus on the digital currency, and blockchain is the fundamental technology that they are planning to use. And other than that, other than the digital currency, there are a lot of other areas where blockchain technology is being used and explored. Can you share your insight into why this blockchain technology seems to be critically important to banks, and especially you see so many startups popping up use trying to use blockchain technology for the benefit of the banking sector?
Yeah, I think so. Blockchain is a very interesting topic, definitely. As you mentioned, it started with digital currency and payments. Once again, my feeling is that banks are now trying to leverage blockchain more, I would say, on an automation purpose. So they're trying to automate their own processes and to make sure, they can clear, they can settle operation and transactions. Some banks, I mean, for me, the two most promising actually uses of blockchain are first identity management and second micropayments. Identity management because with blockchain, you can create this kind of profile where you have all your data, and as a user, I can decide when and with whom I want to share my personal data. I don't have to, if I need to prove that I am a French citizen, I don't have to give my passport to the bank. I can decide just to share the fact that I've got this proof that I'm a US citizen, and I don't need to share my address, how much I weight, what is the color of my eyes, and so on. So I can definitely select the kind of data I want to share. And the second is micropayments, because as you know, transferring money is very, very expensive right now, so it's not at all efficient. But with the blockchain technology, you can send money, a very small amount of money, like 1 or 2 cents or even 10 cents. And so this is creating a new economy, actually, because if you think about content management, for instance, you can get paid for a post you do on Facebook or any other social media or any blog. And of course, you're not going to pay a huge amount of money or dollars. You are just getting a few cents. And with blockchain, this is feasible, So these are the two main drivers. When it comes to coming back to banks, it's kind of funny to see that they are all trying to build their own blockchain. So basically, they are turning blockchain, which is a total open concept, to something very close and limited to a certain number of participants, which is for me is the opposite way of considering blockchain. So it seems that they are trying to limit actually the power of blockchain, trying to master it and trying to limit it to their own use, which is kind of strange, right now.
Yes, absolutely. And you give some really good examples about the micropayments and the identity management. That would be so the one you talked about, identity management, is that already being commercially used, or it is still being tested?
No, I think it's starting, obviously. So what I described is not yet there, but we are seeing some application, especially when it comes to KYC, so know your customer issues, where we are seeing some startups providing some KYC services based on blockchain. And the full point of this kind of solutions is to say that your identity is something you own as a user, as a client,
Yes.
and you don't. So basically, you share your data with the banks. So there is one kind of shared ledger where all your information is there, and basically you can transfer the access to your data to a bank, and then to another bank, and so on and so on. So we are starting to see some. This kind of technology, but I think it's definitely going to be more and more.
Yes.
KYC is such a hot topic for banks that we
Yes,
could expect
absolutely.
many solutions.
Yes, very true, very true, very true. And it
Apologies.
is so advantageous because these innovations, uh, like lending, micro transfer of money, or marketplace lending, and they all will in essence transform the legacy banking operations and take it to the next generation. So it is so useful for and there are so many benefits for the end consumers here.
Yeah, and I think you just mentioned something very important about the legacy, and actually blockchain is going to succeed only if you manage, I mean, from the bank point of view, to integrate blockchain from end to end, which is to say to connect as well some blockchain services to your legacy.
Yeah.
And this is where it's becoming very difficult for banks, because transforming their IT legacy is a very, very difficult and complex project.
It is.
So I'm not sure actually we are going to see, so many innovations coming from banks just for that reason, because it will work for them only if they can connect blockchain or integrate blockchain into their legacy, if they can change, all their business processes. And so probably blockchain is going to become mainstream, not because of banks, but because of new use, because of new entrants, newcomers, which are going to take blockchain to another level. And especially, I mean, considering that banks are trying to limit and to constrain the blockchain power just between themselves, makes me feel that, okay, it's probably going to come from outside the banking industry.
That is true. That is true. That's a good point that you made, that the innovations we will see, they will come out from outside the bank. And I mean, we see that banks are already coming under increased pressure because of all these technology giants, because a major concern for the big banks is that their business services are now being offered by technology companies like Apple or Google or Facebook or Amazon, because each of these technology companies, they already have a huge customer base, and they can build on their customer relationship they already have existing, and
Yeah.
just give them give them the financial services, provide
Yeah.
them the financial services. So banks are at a huge risk. So where is this going? I mean, the banks must be feeling a lot of threat because of this.
Yeah, I mean, when we discuss with our clients, I mean, you have two ways to look at that, So it's true that some newcomers are trying to position themselves in the game, and basically what they are doing is they are taking the relationship with the customers, and basically they are positioning themselves, of course, where the value is. So they are taking lots of value from the total value chain. At the same time, when you look at the impact for the banking industry, except some very specific niche, like the one I was mentioning earlier, about international transfer, the market share that these new entrants are taking is quite small, actually. So just coming back to Lending Club is representing like a few percent of the total loan market in the US, So from the bank's point of view, it's not yet such a threat. It is, but not so big, and I guess they are not considering it as a huge potential, as a huge threat so far. This is point one. The second point is to say that, okay, in any case, banks or financial institutions are required because they are supporting the regulatory compliance. They are supporting regulatory constraints. So still you have financial institutions that could provide their assets and their IT legacy anyway, because when it comes to managing lots of operations, lots of transactions, managing security, providing transparency to the regulator, you have to have this very powerful IT systems here. And so banks still have a place, to play, still have a role to play actually in that new business context.
Yes.
And so of course it's going to be a totally different positioning than the ones they have today. Maybe they are going to get out of the game when it comes to customer relationship, but they will still be able to value the fact that they are regulatory compliance and they have this very powerful IT. The question is, do they really want to go in that direction? Because it's, of course, meaning a new kind of business, less revenues probably. But if the threat I was mentioning earlier is becoming very, very important, and the new entrants are taking a huge market share, maybe they won't have any choices than to go into that direction.
Yes, but you did make a very good point about the regulatory environment, and for the technology companies to meet all those regulatory constraints and the regulatory requirements is going to be very difficult. And that's why I think you made an important point that banks will always play an important role, and they will have a place going forward. But let's talk about the Internet of Things. How do you think Internet of Things is driving the financial industry? Are the banks pushing the wearable applications?
I would say for me, Internet of Things is more related to insurance, to the insurance industry, because it can provide some very interesting data about the customer, the user. And so when it comes to trying to prevent, any problems, basically what insurance companies want to do is really to prevent claims, because claims are costing them money. So with Internet of Things, they can collect many, many data, preventing claims. And of course, when it comes to risk assessment, risk scoring, the more data you have, the better it is. So Internet of Things are very useful for them in that particular context. So I would say Internet of Things is more relevant for the insurance business.
I see. But it seems that only a small percentage of financial industry banking currently support wearables. So it seems that they probably don't see wearables in their future, even though we are already seeing the smart watches and some other, internet IoT based wearables emerging in the marketplace. But we don't see that much push.
Yeah, and I think, when it comes to wearable, it's really a matter of, the customer is deciding at the end, and if there is no use case for the customer, there's no point for banks to push in that direction. If you think about, just retail banking, so basically 90% of interactions with the bank as a customer, from the customers, is to basically look at the balance account, so it's very basic information. So for that, you don't want to have some very powerful wearable. You just want, to receive as an alert the balance of your account. So I guess so far use cases are not there, and so probably for banks, it doesn't make sense to invest so much in that direction. My feeling is that banks are investing much more in artificial intelligence, chatbot, and any kind of interaction you can think about having with your customer. So for instance, using Alexa or Echo from Amazon, just to add some new way to interact with your customers. And this is a perfect example when you can have your chatbot basically speaking with your customer at home through this Amazon device. And this is a way, this is the direction we are seeing our clients taking, banks and insurance companies building some new services to interact with their clients as much as they can and wherever they can, and especially at home, where people have time to think about their finance and start planning for stuff and everything.
Yes, very true. Now, earlier you made an important point about the micropayments using blockchain technology, how to transfer money. And that is a big boost of cost cutting for the banking. And that's why there is a huge interest from the banking sector about using blockchain technology for transferring money. But it also seems that banks and insurance companies and many other companies are trying to work out how they can adapt the technology so that they can allow consumers and suppliers to connect directly and form the digital networks, and thereby removing the need for middleman. So the middleman seems to be facing existential risk here. So what impact do we see because of that, and who do you think will be impacted? Which middleman? When you talk about the broader financial industry, which sectors or which segment of the financial industry is at risk because of this need or because of this desire by the banking sector to go forward in a way to connect directly with the consumers.
Yeah, I mean, yeah, this is a very good point. So for sure, I mean, payment is impacted, international transfer is impacted. We know that the middleman, or let's say the correspondent bank might be replaced with the blockchain, as we have some example already with Ripple, who is basically replacing the correspondent banks. So payment is one, clearing and settlement, definitely. SWIFT might be replaced if banks manage to work all together and build this kind of private blockchain. I think if we think a little bit more forward, maybe insurance companies might be removed out of the game as well, because what blockchain does is really to build this new environment where trust is embedded. There is not a third party which is bringing trust, so people can interact together in this trustful environment, which is more or less what insurance companies are doing. They gather users which are able to share risks. But if you are able to do that on a blockchain technology without any middleman, and if you can automate, claims management, I mean, insurance companies are no longer necessary. We are starting to see some kind of example with Dynamis, Insure ETH, which are basically leveraging blockchain technology to provide some niche insurance services. So it's still niche, but it can grow and become wider and wider. So it started with payment, but definitely it can be much bigger, and insurance industry might be impacted.
That would be very interesting to see what impact the insurance industry will have. Wow, that would be amazing. I haven't read much about that published literature about how the insurance industry could be impacted because of the blockchain. But if you talk about role of insurance when it comes to risk management, I do see that they can play some role, when it comes to managing even cybersecurity risk using the blockchain technology. Probably insurance company can join hands with the risk management industry, and they can play an effective role. But again, let's see, how it shapes up in the coming years. But now, if you talk about the blockchain, the basic fundamental, the foundation of the blockchain, the Bitcoin on which it was based, was the whole concept of decentralization.
Yeah.
So, to not have any central authority.
Yes.
But you are seeing so many, developments happening in parallel, where if you just talk very briefly, I was not planning to talk about the digital currency here, cryptocurrency especially, but it seems that there are several parallel efforts going on. Some are, trying to develop the cryptocurrency based on a decentralized model, and some groups are trying to work based on a centralized model where there would be some authority to provide that kind of trust that there is someone watching over this cryptocurrency, and you won't have to worry about who is in charge. Like, a lot of people have this fear that who is in charge of this money, and is there some government backing or someone backing. So the same idea that no central authority, as we see in the blockchain model of decentralization, I mean, the possibilities are limitless. Now, when we look at innovations that could help secure customer or any client base from across nations' geographical boundaries, the potential is so huge. So what possibilities do you see? Because I think using this kind of technology, blockchain and artificial intelligence and machine learning, you are basically blurring the boundaries between the geographical boundaries. So there is no, you don't your efforts are not focused only on one single nation. What you are developing could be used across your nation's geographical boundaries. So there are so many possibilities. What do you think excites the financial industry because of decentralized model?
No, I think you described it very well. Actually, it's really about scalability. So with these technologies, kind of technologies, you can, be positioned wherever you want in the world. So scalability is definitely very interesting. And when I say scalability, I mean, more and more the largest volume of customer you can think about. So in terms of cost optimization, of course, the more customer you have, the lower the cost per customer is. So this is very interesting for everybody. We have to keep in mind as well that this technology is more like a kind of a framework that you can deploy everywhere, as you said. So you don't have to redevelop everything. You can use this framework and make it work. I won't say very easily, but everything is ready to be deployed. There is one limit anyway, about this scalability is, once again, I mean, regulation, because so far you tend to have a kind of regulation per zone, per country, or per geography or area. And this is probably, the most, the biggest limit actually, because you have to work in each country with the local regulation. And maybe you want to apply for a license, you need to do some kind of specific reporting per country. So scalability is possible on one hand, if you just look at the technology. If you look at the regulatory constraints, well, it might be a little bit more complex than that, unfortunately.
Yes, very true. Now, we just talked briefly about that using this technology, nobody can forge the identity or nobody can forge the document, and I think that is very exciting to a lot of even governments, and it seems governments are also evaluating blockchain potential. Like,
Yeah.
I was reading that Honduras is using blockchain to handle the land titles. Now that is for so many nations, that is, these kind of services are so important because there are a lot of fraudulent documents happening, and the owners, the consumers, I mean, poor guys, little guys, they,
Yeah.
a lot of times they suffer because of that, because they have a piece of paper and they think that they do have the ownership of that, they have the title for that, but when actually time comes, then they realize that someone else is the owner, and the title was no longer valid. So these kind of services seems to be so appealing to protect the little guys, the common man. uh,
Yeah.
from your understanding, how many nations are working, government treasuries especially, or government agencies are working to use the potential of blockchain to transform their government agencies?
Yeah, I think I won't be able to give you a precise number, but I think most of the governments are looking at that. Some of them are more advanced probably than others. I think the UK government, the Singapore government are very keen, to look at the possibilities on blockchain. I mean, if you look at it from a government point of view, I mean, blockchain is great, because it's digital, it's transparent, and it's a perfect tool to track any kind of transactions, any kind of operation, whatever. So, and it is the same actually for any digital operation. When it's digital, it means that somewhere it has been stored in one IT system. So for a government, it's very easy to monitor and to track any kind of operations. It's basically, I mean, when it's digital, it's the end of the black market, because everything is recorded in some place. So all governments are looking at that. You mentioned land ownership, but I was reading this article where I think more than 1 billion of people on Earth cannot prove their identity. And you know that without an identity, you can do nothing actually. So 1 billion, it's huge. And blockchain can provide a very cost-effective way to record, identity for everybody, and to give identity to anybody on Earth, which is definitely, you know, the minimum you should have. And so it's for government, it's another way to look at blockchain.
Yes, that is such a this technology provides so much hope for legitimacy, for accountability,
Yeah.
and for ownership. So this is I hope that in the coming years we see more and more initiatives coming up. I was reading that Citigroup has created Citicoin, a digital currency that also is based on the blockchain, the cryptocurrency. And there are so many other banks like Barclays and UBS. They all have so many different initiatives going on in trial phase. Of course, they are supporting the startups, and they are sometimes they have the internal startups, internal ventures, where they are testing out this technology to provide different services. So based on your knowledge, what initiatives are underway for the future of banking, where it would impact the future of banking?
Well, yeah, it will definitely impact the future of banking. So far, I mean, we are seeing lots of proof of concept, lots of trials, but nothing, or very limited number of projects are really live. We are seeing many, you know, cryptocurrency created, but the ones that you were mentioning, I mean, they are used for internal purposes, so it's not like Bitcoin, you know, open to everybody. I mean, banks are very keen to explore that area. I mean, as I said earlier, I'm not sure actually banks are going to push blockchain to become mainstream. I think it's going to come from outside the banking industry. But definitely banks are, you know, building this environment where everybody can connect. And as you said, I mean, there are so many startups working in that area. I think that one of the main benefits from blockchain is really to make banks think differently, you know, and they're removing this silo approach. They are trying to rethink completely their internal business processes, just because blockchain creates this new way of thinking, removing third party, removing middleman. So they have to think differently. And with so many people interested into blockchain technology, it brings, you know, many intelligence to the discussions, because guys coming from startups, guys interested in the technology inside the banks, I mean, where they are all gathering together, you know, it creates such a dynamic, such a powerful thinking that is great for reinventing the banking industry.
Absolutely. And you made a really important point that, they want to break the barriers of silo, working in silo. They want to remove the middleman. That is a good idea. And I hope they build on that, because right now you will see that even though, as you said, that, they are trying to break the barriers of working in silo, we still see so many initiatives going on to build blockchain based, this kind of permissionless systems, which is like not decentralized. If you talk about just a cryptocurrency, there are two parallel, as I just talked before a few minutes, that there are parallel efforts going on. Some of them are trying to create that cryptocurrency uh, based on the decentralized model, and some are saying that it would not work, we need a centralized model. So they are trying to work towards centralized model. So this is, I think, the concern is fair and legitimate, because everyone is so used to having someone backing the currency. So this concern that to build closed or permissioned only blockchain based network, do you see a need for that? And do you see that the industry first has to come together to decide whether they want to go towards decentralized model, or whether they want to go towards the permissioned only blockchain based network? Because until they decide on that, until they agree on that, there are going to be so many parallel efforts going on, and in the end we will see that it's going to be still fragmented. There is still going to be silo approach.
Yeah, I think it's a very good question. So actually there are two different answers, I would say. So the first one is, when you think about permissioned blockchain, there is a huge impact on security, you know, because the less number of people you have in the blockchain, the less secure it is, of course, because blockchain is based on consensus. So the more people participating to the consensus, the more securities and the less probable you have to get somebody coming up and hijacking, the full blockchain. So this is one point. At the same time, I mean, if you look at, and as you mentioned, different cryptocurrency, and maybe some people are looking to back up cryptocurrency just to make sure, they are not going to lose their money. I think the key point is not really about having somebody backing up the cryptocurrency. It's definitely to have a use around the cryptocurrency, because actually what can have a huge impact is speculation, and we have seen that with the DAO. We have seen that with many new cryptocurrency. At the beginning, there is a huge increase of the price because people are speculating that it's going to be successful. Then at the long term, people are leaving, coming back, and so on. And so the volatility is very, very important. If you look at Bitcoin, Bitcoin is becoming more a currency. It's more mature, so the volatility is going down like any other assets. For Bitcoin, there is a use. We know that it's going to be either a currency, maybe it's going to be a kind of asset where you want to invest, where everything around you is going wrong. So there is a use. For all the others, as long as there is a very clear use for people, speculation is going to be driving the price, and this is not good. You have to be sure that it's grounded on something, on the use. And this is where, maybe having a third party which is backing the value of the cryptocurrency is interesting. And this is where actually I see some opportunity for some big financial institution to become like the market maker of a cryptocurrency based on something they have to figure out. But definitely you cannot rely only on speculation, because if it's only that, it's not going to work, because as a user, I don't want to invest in such a volatile asset.
Very true, very true. And also there is another factor that we need to consider is the ability to, the scalability, rather, I would say, that whether we would be able to all these innovations and all these new products and technology and processes that we are, based on which we are trying to transform the financial industry, whether it is scalable, whether the technology is scalable in an efficient manner. That is also something we need to address. Is the financial industry paying attention to this, scalability factor?
Yeah, definitely, and that's why I think they are trying to build some closed loop blockchain or permission blockchain, because they want to control, the volume of activity on their blockchain. And especially if you compare, blockchain capabilities or Bitcoin capabilities to payment processing capabilities, there is a huge difference. But my feeling is that, uses are different, so you don't want to compare exactly that. Scalability is for sure an issue. But if you compare, the development of blockchain to the development of internet at the very beginning, it's very similar. At the beginning of internet, you had different network, different kind of protocol, and then everything came up together, And I think we are probably not yet there, because it won't be good to have a standard yet, because blockchain is still exploring, different. I mean, there are so many blockchain technologies, so you don't want to limit them in one standard. So we have to wait a little bit more to see where the technology is going, and then I guess the standard will come up like that, because it makes sense to have a standard at some point, but not yet there.
Yes, absolutely. Now, when we read or review the information that has been published about the financial sector or the future of banking, you see the vision that they have put together. The vision about the potential of future banking is that banking without bankers, or operations without infrastructure, or trading without traders, or merger acquisitions without advisors, or lending without deposits, or service, without bankers, or payments without middlemen. So there is a pretty, very fundamentally different vision that you see about the banking. the future of the banking than what we see today, in banking. But there is, a couple of areas in that they're really troubling. Is that one is the trading without traders. Now, when we talk about trading without traders, some people say that it is high frequency trading. Some people say that there are already artificial intelligence based algorithms that are quite capable of trading on their own. Now, when we talk about these kind of advances that are coming our way, you worry about a lot of different playing field. Because if we talk about, let's say, trading based on the artificial intelligence based algorithms, now if that is used by institutions or entities or individuals who are capable of affording that, or who has that technology, not everyone will have this technology. So what would happen to this trading that we see across nations right now, all the current stock exchanges where a lot of individuals are trading? So how would you see the level playing field? Because some of them would be making will have the advantage of using the artificial intelligence based algorithms, and they would have huge returns because of that, extra, that intelligence that they have, non-human intelligence. Whereas most of the people across nations, they will be using just a human intelligence. So there are a lot of, imbalances that we see will be occurring in the coming years, and that is a cause of concern.
Yeah, I think it's a very good point, and well, I mean, I think it's already happening actually, because today you have two kind of people. The one who knows the information, and the others actually, and the one who knows are making much more money than the others. So my feeling is that, okay, this information knowledge is moving to the next level, maybe with, okay, now you don't have to just look for information. You can use artificial intelligence to anticipate, the information, and to be much clever, because you can forecast the future. So, I mean, tomorrow we are still going to have the two kind of people, the one who knows, or the one who are able to anticipate the future, and the others. But I mean, it's not going to change from today. We still have these two kind of people. And coming back to blockchain, it's kind of interesting to say that blockchain is supposed to bring transparency, that everybody should have access to the same information with no middleman. This should be the ideal world, but the reality is that, I mean, transparency in banks or transparency in finance, I mean, usually they are not going well together. It's very unusual to see transparency in the financial industry. So it's strange to see that banks are so interested in blockchain. But yeah, I mean, so this is where information is key. Being able to know the information now or in the future is going to make a huge difference. I agree, but for me, it's not going to be different than what we have today, actually.
Yes, very true, very true. Now, as we see the digitization effort, continues for this financial industry, users, consumers, citizens, they all will expect banking experiences to be more like, their experience with other industries, where it is simple, it's convenient, it's lot of things happen in shopping based on the product marketing happens because of the user referral. So all the other industries experiences are centered around all these very simplistic consumer expectations. So do you think that the financial technology innovators are focusing on these expectations of simplicity, convenience, and user referrals?
Yeah, I think so. I think we had a three-step approach in the financial industry. So first, they were really focusing on products, so they were product-centric. Then they understood that customer is really important, so they become like client-centric. So that they tried actually to build some new channel to interact much more with the clients. And now they are becoming use-centric, which is what you mentioned about simplicity, being straight to the point, and answering a need from the client instead of trying to be some kind of any kind of services. And I think when it comes to retail banking, we are seeing lots of initiative in that area. So first, it came from startups such as Simple in the US or Moven in the US. But now banks have understood that, okay, they need to be much more focused, much simpler, and makes things very easy for the users. And just to give an example, as a user, when I think, or what I would like to do, in my day-to-day banking activities, is basically very simple. It's to be able to pay, to look at my balance account, and to save money for my, short-term needs, like paying my rent at the end of the month or preparing my holiday breaks for Thanksgiving. This is very basic. And actually, I don't care about, current accounts, saving accounts. I don't care about having a credit card on one hand, go online and pay with PayPal on the other hand. So what I want is to have this consistent user experience where I can just pay whatever the payment mean is. I can just look at my balance, of course, get paid on this support, and they save money, and we are seeing some banks, moving in that direction and trying to remove all the banking wording and replace it by customer needs, actually, what the client is really looking for and what he wants, what he expects to find in his day-to-day life. And this is definitely inspired, as you mentioned, by other industries. And as a client, as a user, we are all used to live in this connected world, digital world, where we have very simple, easy, straight to the point experience. So we expect to have the same in the banking industry.
Yes, yes. Now, earlier you mentioned peer-to-peer payments, and it seems that the peer-to-peer payments is rising rapidly. Can you explain the phenomenon behind that? That what is, triggering this rise in peer-to-peer payment when you look at the financial industry?
Yeah, I think the first point is really basically to be able to interact between people. So peer-to-peer interaction is definitely part of our day-to-day life, of course, in the physical world, but now more and more in the digital world with Facebook and everything. So we want to be able to connect directly to our peers, and it should be the same to be able to send a message to somebody than to send money to this person as well. This is one key direction. The second is, removing making the experience simple, as you said. If you want to transfer money to somebody right now, going through your bank, it's very difficult. You have to ask for the bank account of the people you want to send money, go online, input all the data, and so on. It's very complex. If you just go to PayPal, it's very easy to send money to a mobile phone number or an email address. Simplicity is definitely key. And then I think there is another topic, which is, all the newcomers basically are trying to benefit from a gray zone when it comes to regulation. And what we could see in peer-to-peer lending, for instance, is exactly that. They are leveraging the possibility to connect two people together without taking the risk, actually. So they are transferring the risk to the investor. And so the bank in the middle, or the third party in the middle, is not taking any risk. So from a regulatory compliance, it makes huge difference. So I think there is, on one hand, the needs for people to be directly connected to each other and to make money transfer as simple as it is to send a message. And on the other hand, some opportunities to, let's say, be less constrained by the regulatory environment, working directly between peers.
Yes, yes, very true. Now, in the beginning, you made an important point about mobility, that how that is transforming and shaping the financial industry of tomorrow, and the banking especially. And it seems that the mobile platforms for innovative payment models and commerce capabilities are transforming, as you suggested in the beginning. And there are many different initiatives you see, like Australian multinational bank also recently launched a mobile application that lets their customers view their current balance and or even also find the nearest ATM. So there are a lot of applications that are developing, a lot of banks are putting their effort towards that. So from your perspective, in what ways consumers are benefiting because of all these advances happening in the mobile sector, in the for the smartphones, for the mobility, that is kept at the center by all these banks and the banking industry?
Yeah, I think, and this is very true. I mean, banks are definitely leveraging the mobile to bring more services to their customers. I can't remember who, but somebody said that the smartphone is basically the brain amplifier, for everybody. So when you have a smartphone, you can get smarter because you have more information, and especially you have this information real time. So for banks, it's okay. It's interesting to look at your balance. It's interesting to know where is the closest branch. It's interesting to look at the way you have spent your money. But what is really interesting is to get advice, on the spot, I would say. So if you get advice on should you spend this amount of money right now, or maybe you have to wait because if you can get some scoring about can you afford this loan or not, you want to buy something, if you can get, even if it's a micro credit, if you can have it real time, it's very interesting. So all this advice you could get on your mobile,
That is so amazing.
Helping you the future and not to look back is really interesting. And I think many banks are going into that direction.
Yes.
And this is the way they should go, because as a user, I want to be advised. I don't want to just receive information from what happened in the past.
Yes, very true, very true. Now, when we look at the investment, I'm not sure if this is the accurate number, but from what I got based on the published literature, is that in 2015, that about $23 billion were invested for the financial industry technology transformation initiatives. I'm not sure if this is an accurate number, but where are the investments going based on your knowledge?
Well, I mean, probably the most important part would go to digitization of processes. So it's more about like internal transformation, I would say. Probably the same amount would go to customer interactions, like as you mentioned, mobile, but any kind of digital platform you can think about. And I guess we are seeing a new category emerging, which is really about linked to regulatory compliance again, reg tech, which is to say how digital capabilities can help the bank to be regulatory compliant or to report to the regulators. And this is probably the piece that is going to get more and more traction in the future.
Yes, very true. Now, as the technology transforms financial industry, what are your main concerns? Where do you see the need for more effort?
Well, I mean, still, when it comes to being use-centric, we are still far away, I think, from what as users we are all expecting. Banks. I mean, banking is still very complex. Day-to-day banking, okay, is becoming clearer and clearer. But when you think about, your future, how you want to plan your retirement, how you want to plan for the education of your kids, this is still very, very complex. So I think banks would have to invest a lot in how can they nudge customers toward financial health and make sure, everybody has a full level of services in terms of financial product or coverage, let's say, that we would need. So everybody should understand, that retirement is something you need to plan very in advance. You need to plan many things in advance, and banks should help people to do that and have the capabilities actually to do that. Right. This is one, and I think the second is definitely coming back to one of my first points, financial inclusion. Worldwide, I guess probably I don't have the right number in mind, but I would say, I don't know, more than 2/3 of people living on Earth do not have access to full range of financial services, and this is definitely something that needs to be changed. And it's an advantage for banks as well, because it's a new market for them, and it's a win-win. It's a win for people having access to financial services, and it's a win for banks because they can increase their market share.
Yes, absolutely. Absolutely. No, very true. Now, thank you, Patrick, for participating in Risk Roundup today. We appreciate your thoughtful insight on the financial industry technology transformation information that you shared. Our global viewers and listeners would benefit tremendously from the information you provided on blockchain and artificial intelligence and mobility and so many other areas that are being explored to bring meaningful changes to the infrastructure, products, and processes of the financial industry. So even if a single individual or entity can come up with an idea to innovate the financial industry and bring the much needed transformation to take it to the digital global age based on the discussion we had today, this Risk Roundup dialogue has been of service, and we thank you for that.
Thank you so much.
Wonderful, Patrick. So as financial industry and institutions are now racing to harness the power of emerging technologies like blockchain and artificial intelligence and Internet of Things, the question decision makers need to evaluate is how can they benefit from the emerging technologies? How can they go digital? And how can they avoid obsolescence? Risk Group Cybersecurity Risk Research Center and Strategic Security Risk Research Center are created for this very reason, to identify, evaluate, and manage the risk facing NGIOA in CGS, that means nations, its government, industries, organizations, and academia in cyberspace, geospace, and space. And we at Risk Group believe that risk management, security, and peace walk together hand in hand. Though security is related to management of threats and peace to the management of conflict, risk management is related to management of security vulnerabilities as well as management of conflict. And it is not possible to conceive any one of the three without the existence of the other two. All three concepts feed into each other. We believe that the security we build for ourselves is precarious and uncertain until it is secure for everyone across nations. Tradition becomes our security, so if we build a culture of managing risk effectively, it will lead us to security, and security will lead us to peace. Let's manage the existing and emerging risks together. For more information on the Risk Roundups, to watch the Risk Roundup videos or hear the Risk Roundup podcast, please go to riskgroupllc.com and do not forget to subscribe and share. Until next time, I'm Jayashree Pandya, host of Risk Roundup, signing off. See you next time. Thank you.